Seagate Technology Holdings, ticker STX on the NASDAQ, the company that invented the hard disk drive and still holds the world's largest share of mass-capacity HDDs.
Founded in 1978 in Fremont, California. 40,000 employees. The manufacturer that shipped 139 exabytes of storage in fiscal year 2024 and whose highest density drives have become critical AI data center infrastructure.
In 1978, Al Shugart and Finis Connor designed the first 5.25-inch hard disk drive for personal computers. The ST506 became the standard shipped to Apple and IBM, launching Seagate as the foundational storage company of the PC era.
In 1996, Seagate acquired Connor Peripherals for $1.1 billion, becoming the world's largest hard drive manufacturer. The consolidation of the HDD industry began at Seagate and continued for the next 3 decades.
Silver Lake took Seagate private in 2000 for $2 billion, funding the next phase of product development. The company returned to public markets via re-IPO on NASDAQ in 2002.
In 2011, catastrophic flooding in Thailand destroyed competitor manufacturing facilities. Seagate gained significant market share as supply tightened and pricing power surged for over a year, demonstrating the industry's geographic manufacturing concentration.
Dave Mosley became CEO in 2016, sharpening Seagate's focus on mass-capacity nearline drives for hyperscalers. In 2023, HAMR technology commercial shipments began, the milestone that changed Seagate's product roadmap.
HAMR, heat-assisted magnetic recording, allows Seagate to pack 3 to 5 times more data per platter than conventional recording technology. The first HAMR drives shipped to hyperscalers at over 30 terabytes per drive in 2023.
Seagate generated $6.21 billion in fiscal 2024 revenue, up 16% year over year. The mass capacity segment, cloud and enterprise nearline drives, accounts for 73% of revenue.
Legacy PC and consumer storage contributes the remaining 27%. Adjusted EBITDA margin reached 22.8%, up 6 percentage points year over year, as mass capacity mix improved and AI-driven demand accelerated.
Seagate shipped 139 exabytes in fiscal 2024, a 42% increase year over year. A single AI training run for a large language model generates petabytes of checkpoint data, requiring persistent storage at scale.
The cost per terabyte gap is the economic moat. HDD is 5 to 8 times cheaper than enterprise SSD for warm and cold storage tiers. At petabyte scale, that cost difference translates to hundreds of millions in annual hyperscaler capex savings.
Seagate supplies all 5 of the world's largest hyperscalers. These are multi-year supply relationships built on 18 to 24-month qualification processes. Once designed into a data center architecture, replacement is measured in engineering years and yield risk.
On the competitive radar, Seagate leads HAMR technology at 95 and AI storage pipeline at 92. Western Digital is the primary competitor, but Western Digital's equivalent HAMR technology is still behind Seagate's commercial deployment milestone.
NetApp and Pure Storage compete in flash and enterprise storage, but at fundamentally higher cost per terabyte. For the cold and warm storage tiers that AI infrastructure requires at scale, HDD economics are structurally advantaged.
Seagate operates manufacturing across Malaysia, Thailand, and China, facilities built over decades, with nanometer tolerance precision assembly that cannot be quickly replicated. The manufacturing know-how is a 45-year competitive accumulation.
Dave Mosley has been CEO since 2017. He holds a BS in metallurgical engineering from Stanford University and has spent his entire career at Seagate, rising from process engineering through EVP operations before taking the top role.
His focus since becoming CEO has been clear: exit the PCR product mix, accelerate HAMR development, and lock in hyperscaler relationships as AI infrastructure creates a multi-year demand cycle for mass capacity drives.
Hard drive manufacturing requires some of the most precise mechanical assembly in consumer electronics. Tolerances measured in nanometers, built on decades of process optimization that gives Seagate a manufacturing moat few outside the industry fully appreciate.
Seagate ships 139 exabytes of storage annually and holds the manufacturing know-how behind HAMR technology, a 30 terabyte drive that packs enough data density to change the economics of AI infrastructure storage at hyperscale.
The AI data supercycle is the re-rating event. Every GPU cluster generates checkpoint data that has to go somewhere permanently, and Seagate's mass-capacity HDDs are 5 to 8 times cheaper per terabyte than the SSD alternative, making the bear case for hard drives structurally weaker than it has been in a decade. Seagate Technology Holdings, ticker STX, reported Q3 FY2026 revenue of $3 billion, up 39% year-over-year. The 46-year-old hard disk drive manufacturer is in the biggest demand surge in its history, driven by AI data center mass storage build-out.
Adjusted EPS, $3.55 versus $3.47 estimate, a 2.3% beat. Revenue, $3 billion, beat the $2.94 billion estimate. Mass capacity shipments exceeded 120 exabytes, a company record.
Seagate makes the nearline hard drives that store AI training data and model weights at data centers worldwide. Every GPU cluster needs 10 times as much HDD storage. Seagate supplies it at 20 cents per gigabyte, 10 times cheaper than NAND flash.
The stock is at $508, up 700% from the 52-week low. Has the AI storage supercycle been priced in, or is HAMR just beginning? Let's build the case.
3 changes define Q3. First, HAMR technology ramp. Seagate's Mosaic 10 Plus platform, heat-assisted magnetic recording, achieved commercial volume in Q3 FY2026. The 30 terabyte per drive HAMR product shipped to all major hyperscalers, replacing conventional 20 terabyte drives at equal cost.
Second change, hyperscaler storage build-out acceleration. Alphabet, Meta, Microsoft, and Amazon increased storage orders 30% in Q3 as AI training run sizes scaled. GPT-class model training consumes petabytes. Every GPU rack needs 10 nearline HDD racks attached.
Third change, pricing power. Average selling price per exabyte of nearline HDD storage increased for the second consecutive quarter, the first pricing power in the HDD industry since 2022. Seagate and Western Digital control 98% of the global nearline HDD market.
Mass capacity mix. In Q3 FY2026, mass capacity represented 78% of revenue, up from 63% 2 years ago. Legacy consumer and mission-critical HDDs continue shrinking as the enterprise nearline segment dominates. This mix shift structurally improves Seagate's margins.
Operating leverage. Gross margin expanded to 41.6% in Q3, the highest since 2013. HAMR drives carry significantly higher gross margin than conventional drives, and the fixed manufacturing cost base at Bloomington, Minnesota and Korat, Thailand is now fully leveraged.
Balance sheet improvement. Net debt declined from $4.1 billion in Q2 FY2025 to $3.5 billion in Q3 FY2026, despite heavy capex for HAMR manufacturing retooling. FCF of $750 million in Q3 is funding dividend payments and modest deleveraging.
Supply discipline. Seagate and Western Digital have kept HDD capacity additions below demand for 8 consecutive quarters, maintaining the pricing environment supporting Seagate's 30% operating margin.
Q3 FY2026 revenue, $3 billion, up 39% from $6 billion in Q3 FY2025. Revenue beat the $2.94 billion consensus estimate by $60 million, a 2.0% beat. This marks the 5th consecutive quarter of revenue acceleration.
Mass capacity segment, $2.33 billion, 78% of total revenue. This segment was $1.55 billion in Q3 FY2025, 50% growth. Every exabyte shipped at higher ASP than a year ago, driven by HAMR drive premium and supply discipline.
Legacy segment, $667 million, declining 20% year-over-year as enterprise mission-critical and consumer HDD markets continue their long-term contraction. The legacy shrinkage is manageable. It is offset 3-to-1 by mass capacity growth.
Adjusted EPS, $3.55, above the $3.47 estimate. GAAP EPS was $2.85, reflecting stock compensation expense of approximately $150 million. The GAAP-adjusted GAAP is stable and expected. Seagate's adjusted metric is the operating reality.
Gross profit, $1.25 billion. 41.6% gross margin, up from 38.5% in Q3 FY2025. HAMR drives at lower variable cost per terabyte. Silica substrate innovation reduces write cycles needed, contributing 300 basis points of margin expansion.
Operating income, $900 million, 30.0% operating margin, up from 20.1% in Q3 FY2025. The 900-point margin expansion reflects HAMR mix, operating leverage on the fixed cost base, and declining R&D amortization from HAMR development completion.
EBITDA, $968 million, 32.3% EBITDA margin. The annualized run rate of $3.9 billion positions Seagate as a major FCF generator at current revenue trajectory. Enterprise value to EBITDA, approximately 28 times on a forward basis.
Free cash flow, $750 million in Q3. Capital expenditures of $105 million were flat year over year as HAMR retooling CapEx peaked in FY2025. Full year FY2026 FCF guidance is $2.6 to $2.8 billion.
Balance sheet, cash $1.05 billion, total debt $4.5 billion, net debt $3.45 billion. Debt to EBITDA approximately 3.5 times, elevated but declining. Investment grade credit maintained. Revolver availability $2 billion.
Dividend, 73 cents per quarter, $2.92 annually. At $508, yield is 0.57%. Seagate has maintained its dividend through the 2022-2023 storage trough, a signal of management's confidence in long-term FCF durability.
Full year FY 2026 guidance, adjusted EPS of $12.50 to $13, implying significant Q4 acceleration with guidance for $3.1 to $3.2 billion Q4 revenue. Management cited record hyperscaler forward orders and HAMR 40 terabyte sample shipments beginning to 3 customers.
Mass capacity shipment volume, 122 exabytes in Q3, up from 81 exabytes in Q3 FY 2025. Each HAMR drive holds 30 terabytes. Volume growth and ASP improvement are simultaneously compounding revenue and margin expansion.
Dave Mosley has been CEO since October 2017, rising through Seagate's recording heads division over 15 years in drive technology. He executed the most capital-intensive transition in HDD history, HAMR, without losing a point of market share.
Mosley's Q3 message: HAMR is no longer a technology bet, it is commercial reality. The 30 terabyte drives exceeded reliability targets in 300 million customer drive hours. The 40 terabyte product entering qualification extends Seagate's density lead by 2+ years over Western Digital.
Capital allocation. Mosley prioritizes debt reduction over buybacks until net debt reaches $2.5 billion, expected by end of FY 2027. After that, FCF shifts to dividends and share repurchases as the return of capital phase begins.
Technology roadmap beyond 40 terabytes. Seagate is developing 50 terabyte HAMR using multi-actuator technology. Multi-actuator doubles read-write bandwidth per drive, critical for AI inference workloads requiring high-throughput sequential reads from massive model weight files.
Revenue bridge, 39% growth from $2.16 billion to $3.0 billion. Mass capacity contributed $1.16 billion of the $840 million increase, 138% of the net delta, with legacy decline offsetting a portion.
Gross margin bridge. Gross margin expanded from 38.5% to 41.6%. HAMR mix contributed 2.5 points. HAMR drives carry a $12 to $15 per drive premium with similar variable cost to conventional drives, leveraging sunk HAMR development costs.
SG&A $143 million in Q3, 4.8% of revenue, down from 5.7% in Q3 FY 2025. Seagate's SG&A is lean. HDD is a B2B business sold directly to a concentrated set of hyperscalers and OEM distributors with low marketing spend.
R&D $187 million in Q3, 6.2% of revenue, declining as HAMR development completes. The next R&D wave, 50 terabyte multi-actuator and 60 terabyte glass substrate HAMR, enters engineering in FY 2027.
Interest expense, $72 million in Q3, annualizing to $288 million. Net debt of $3.45 billion at blended 5.2% weighted average cost. Seagate's debt maturity ladder is well structured. No major maturities until 2027.
Tax rate, 17% adjusted, benefiting from Singapore's manufacturing tax incentives and Ireland's 12.5% statutory rate on IP income. Seagate's effective tax rate is structurally lower than U.S. peers due to its non-U.S. domicile and offshore manufacturing concentration.
Capital expenditure intensity, 3.5% of revenue in Q3, among the lowest in the semiconductor supply chain. HDD manufacturing requires precision but not the enormous lithography capex of NAND flash or logic chips. Seagate's capital-light model versus NAND peers is a structural free cash flow advantage.
Working capital. Seagate's receivable days are approximately 40. Hyperscalers pay on net 45 terms. Inventory days are approximately 35, lean, enabled by the concentrated customer base and just-in-time production scheduling.
Customer concentration. The top 5 hyperscalers represent 65% of mass capacity revenue. Google alone is estimated at 20%. High volume and predictable scheduling offset their price negotiating leverage.
Exabyte economics. 122 exabytes at 25 cents per gigabyte equals $3 billion in quarterly revenue. Each 10% ASP increase adds $300 million in annualized revenue at near zero incremental cost. Pure operating leverage.
Leverage trajectory. Net debt was $6.8 billion at the FY2024 trough of the storage cycle, when the stock was near $60. Today it is $3.45 billion and declining. The deleveraging path supports multiple expansion as credit risk diminishes.
FCF conversion. EBITDA to FCF conversion is approximately 77%. Taxes, interest, and capex consume the balance. As net debt falls toward $2 billion, interest expense drops, and conversion improves toward 85%, a further EPS catalyst.
Western Digital comparison. WDC is Seagate's closest peer, also HDD plus NAND flash. WDC trades at 25 times forward earnings versus Seagate at 42 times. Seagate commands a premium for its pure-play HDD mass capacity focus.
NetApp comparison. NTAP is a storage systems integrator, all-flash and hybrid cloud storage. NTAP trades at 22 times forward earnings versus STX at 42 times. NTAP has lower growth, high single-digit, and lower margin potential than Seagate's pure HDD mass capacity model.
Pure storage comparison. Pure is the all-flash market leader. SaaS model, 20% ARR growth, 50% gross margins. Pure trades at 60 times forward earnings. If HDD dominates mass storage, Pure competes in the premium tier only.
NAND flash peers. Samsung and Micron supply NAND at $1 to $2 per gigabyte. Seagate nearline HDD is 20 cents per gigabyte, a 10 to 1 cost advantage. AI training data lakes are stored on HDD. Active inference weights live in DRAM and SSD.
Market structure. Global nearline HDD is a duopoly. Seagate at 55% and Western Digital at 43%. No entrant has built a new HDD manufacturing line since 2008. The duopoly is a permanent moat.
Valuation context. At 42 times forward earnings, STX trades at a premium to its own 10 to 20 times history. The AI storage multiple rests on one question. Is nearline HDD and AI infrastructure essential or a commodity cyclical? The next 2 years decide.
FCF yield comparison. Seagate's 2.3% FCF yield exceeds NAND peers at 1.5 to 2% and cloud storage pure plays at below 1%. The HDD model generates superior near-term FCF even at elevated stock prices.
Risk 1. NAND flash price collapse. In 2022-2023, overcapacity drove SSD prices below $1 per gigabyte, temporarily competing with HDD economics. If Samsung and Micron overinvest in NAND again, warm storage could migrate to SSD and cost Seagate 10 to 15% of nearline demand.
Risk 2. AI capex deceleration. Any reduction in AI training scale, from model efficiency breakthroughs or regulatory barriers, directly reduces hyperscaler storage procurements below the 100-plus exabyte quarterly run rate.
Risk 3. Manufacturing concentration. Seagate's primary HDD assembly is in Korat, Thailand. The 2011 Thailand floods destroyed 5 years of HDD supply and cost the industry $4 billion in lost revenue. Geographic concentration in a flood-prone region remains an unresolved supply chain risk.
Risk 4. Customer concentration. The 5 largest hyperscalers represent 65% of mass capacity revenue. A single large customer insourcing storage has been rumored for Microsoft's custom storage architecture, could reduce Seagate's revenue by 15 to 20%.
Catalyst 1, Q4 FY2026 guidance beat. If management guides Q4 EPS above 390 and revenue above 3.2 billion, full-year FY2027 consensus moves towards $16 per share, implying a 31 times forward PE and 12% upside to 550.
Catalyst 2, HAMR 40 terabyte production qualification. 3 hyperscale customers currently testing 40 TB HAMR samples. Qualification completion in Q4 FY2026 means mass production begins in Q1 FY2027, another 2-year density lead over WDC, and a potential ASP step-up.
Catalyst 3, debt reduction milestone. When net debt reaches $2.5 billion, expected by end of FY2027, Seagate's board has indicated dividend growth and buybacks as priorities. FCF redeployment to shareholder return could be a meaningful re-rating event.
Analyst Consensus, 22 buy, 6 hold, 2 sell. Average target 545, 9% upside from 508. The street is broadly constructive on STX as the dominant AI mass storage beneficiary in the HDD duopoly.
JP Morgan buy at 600. The HAMR technology transition creates a 1 to 2 year window where Seagate has zero competition at 30+ terabytes per drive. JPM models FY2027 ADJ EPS of $16, implying 31 times forward earnings and 600 fair value at current multiple.
Citigroup buy at 560. The nearline HDD TAM doubles by FY2029 as AI scales. Citi models 40+% gross margin sustainably, above street at 38%, as HAMR reaches 100% of mass capacity by FY2028.
Barclays hold at 490. The 340% rally has pulled forward 2 to 3 years of earnings. HDD is ultimately a commodity, and NAND flash could disrupt at scale if SSD prices fall below 30 cents per gigabyte.
FCF yield case at 2.6 to 2.8 billion, FY2026 FCF on a 109 billion market cap, yield is 2.4 to 2.6%, below the risk-free rate. The multiple requires sustained FCF growth.
FY2026 ADJ EPS guidance midpoint 1275. At 42 times forward earnings, fair value is 535 to 550. The stock at 508 trades at a modest discount to fair value on FY2026 consensus, but requires FY2027 execution to hold the multiple.
At 508, STX trades at 11 times forward revenue, elevated for hardware but justified by 30% operating margins and the AI duopoly. Multiple compression is the bear case. Multiple expansion on FY2027 EPS acceleration is the bull case.
Bull case, AI data storage is structural. Every large language model requires petabyte-scale storage for training data, model checkpoints, and inference caches. As models grow from 1 trillion to 10 trillion parameters, the next generation frontier, storage needs grow proportionally. Seagate is the only mass-scale supplier.
HAMR 40 terabyte optionality. If Seagate's 40 TB HAMR drive reaches production in Q1 FY2027 on schedule, the company ships 33% more storage per drive at the same ASP, an immediate unit economics improvement. WDC's competing MMR product is 15 to 18 months behind.
Margin expansion compounding. From 24% gross margin in FY2024, trough to 41.6% in Q3 FY2026. Each point of gross margin expansion at $3 billion quarterly revenue is $30 million of gross profit, compounding as mass capacity volume grows.
Bear case. The AI storage boom is a procurement cycle, not a secular demand shift. Hyperscalers are ordering 18 to 24 months of capacity in advance. When buffering completes, Seagate's order book could reset to below average levels, as happened after the cloud storage burst of 2018.
Technology disruption bear. Quantum storage technology and DNA storage have theoretical density advantages of 1 million times over HAMR. If any lab-stage technology reaches commercial feasibility in the 2027-2028 timeframe, the HDD market could face a disruption threat that Seagate's entire HAMR investment does not hedge.
Leverage sensitivity bear. Net debt $3.45 billion at 3.6 times EBITDA is manageable in the current environment. But if AI training demand slows and EBITDA reverts toward $2 billion, leverage spikes above 5 times, and the debt covenant framework becomes restrictive, limiting dividend and buyback flexibility.
Resolution. Bull case wins if AI model scale keeps doubling annually and HAMR maintains Seagate's density lead. Bear case wins if NAND normalizes below 30 cents per gigabyte or hyperscalers pause storage procurement. The Q4 FY2026 order book on the earnings call is the first read.
Bottom line on Seagate. Q3 FY2026 confirmed the AI mass storage thesis. $3 billion revenue, 30% operating margin, and 122 exabytes shipped in a single quarter. HAMR drives are in production, the HDD duopoly is intact, and FCF is compounding. The 340% rally from the trough prices and continued execution, the 40 terabyte ramp, and FY 2027 guidance are the next data points.
22 buy, 6 hold, 2 sell, average target 545, 9% upside from 508. The bull case is AI storage is structural, the bear case is procurement cycle reversal and NAND disruption. FCF of $2.6 billion in FY 2026 at a 2.3% yield, low for a cyclical manufacturer at peak cycle.
Charged Alpha is an educational commentary podcast. None of the content here constitutes financial advice, investment advice, or a recommendation to buy or sell any security. We do not hold positions in securities discussed on this show. Always consult a licensed financial advisor before making any investment decisions. Securities mentioned are for educational discussion only and are not buy or sell recommendations.
Ooh, we do! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.